Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I am a financial advisor, but this video is not financial advice. In this video, I want to talk about what in the world is going on with PowerPacks. Okay, let's start hitting some of the questions. What we know, what we don't know, what's the best case, what's the worst case, what were my best assumptions and projections, what were my worst assumptions and projections. We're going to try to dig into it in this video. And hopefully you learned something. If you don't, let me know what you wish you would have learned, because there are some things that we don't know yet. And if you do, let me know in the comments, leave a like. Before I get into it, thank you to those who have subscribed. And I need to make a live stream soon so we can hang out. I can talk channel stuff. I can talk microphone purchase, all the things, as well as, of course, the next sub club that we are on a march towards. More to come with all the channel fun. Also, thank you to those who have joined as fans and friends of the channel. All the earnings do go to DRS Book GME shares. So, let's tee up this conversation with PowerPacks, okay? Because some of y'all are like, oh man, Jeremy with the biggest L take of the century. He's probably crushed about PowerPacks. He's probably thinking, oh man, he was way off. Now, there's some truth to that side of the coin, but the other side of the coin is, golly, I was right on the money. I was all over it. If you want to go back to my live streams, one of the first ones I made, it's almost 2 months ago now, where I first modeled my expectations for GameStop's Q3 collectible sales, I thought that PowerPacks would be about $3 million in a bump for GameStop's revenue in Q3. And I thought that Lego would add about 7 or 8 million. If I had started from that $245 million base that I was multiple metrics led me towards, you add in that 8 and that 3, what would that have put my my model at? 256. What was GameStop's actual number? 256. I mean, holy smokes. So anyways, I was super wrong about some things, but let me explain kind of the shifts of what happened. And ultimately there's different ways that the PowerPacks partnership could look like. And where I was at in this video, my first assumption was that PowerPacks is primarily PSA's business, that GameStop probably receives like a 6% commission for all of the sales, but the cards belong to PSA. What happened after Cohen's interview is I flipped to the other side of the spectrum, because it became clear, not just from Cohen's interview, but also from GameStop's inventory, right? We saw at the end of Q3, right before Q3 numbers land on November 1st, we saw a huge dump of their graded card inventory off of their website. Not all sold in a day, but what's assumed is, hey, before quarter end, they're moving inventory out of GameStop and into PowerPacks. They're contributing cards over to the PowerPack side of the business. And this evidence, combined with some of Cohen's statements, led me to think, oh wow, I think maybe the opposite, right? Maybe PowerPacks is primarily GameStop's business, and PSA is the one receiving a little transaction fee for, or maybe they just get, right, the boost from extra cards being graded, the vault cards that are sold through eBay that they make a fee for, right? Maybe that's what they get out of it, but mostly GameStop gets the lion's share of it. Again, if you want to look back at this video, it might be a little bit helpful. Also because, right, I am trying to be level-headed in my analysis of GameStop. And you might think, oh, wow, he must be really crushed if he's, so bullish on PowerPacks. And then it ends up, what? It ends up being not material, individually or in the aggregate during the current fiscal year. And as a result, during quarter three, because it's the first quarter that it came out. So we're going to dive into that. What does that mean? So many things to get into, but let's start with what I've already started with, which is what is the nature of the partnership? And we know now that it is, well, we don't know for sure. Okay. We don't know, but in all likelihood, it is, well, let me just say the three options. Okay. It's, it's either the first one I mentioned, right? Where all of the revenue and the costs are basically assumed on PSA's end, and the just the transaction fee, right, is going to GameStop. It could be the opposite, where all the revenue and the costs are going to GameStop and just a transaction fee is going to PSA. Or it could be this option that I never considered. And at this point, I think we have evidence that this is the correct assumption, which is that it is a truly 50-50 partnership between GameStop and PSA. I think that's the most likely, but any of the three could be still the case. It could be any of those three structures. We'll get into what's the most likely structure here in a minute. Now, ultimately, if you go back and watch this video, it's funny because the reason I end up skewing a little bit higher on my projection, I ended up projecting 271 total in this video, which is about 5% high. The reason I bumped it up a little bit was because when I crunched all these numbers, it was like, man, quarter over quarter, year over year, trend analysis, historical analysis, the qualitative data that we can see, right, from whether it's from GameStop's card inventory or whether it's from courtyard.io sales, which collapsed from 60 million a month down to 30, down to 10, right as PowerPacks launched, right? So PowerPacks, we don't know, okay? But like all evidence would suggest that PowerPacks launching this business with its competitive advantages substantially cannibalized Courtyard's business, which is meaningfully the same business, but not as many competitive advantages. So we had this evidence to like, man, it seems like PowerPacks is probably doing a good chunk of dollars. And it seems that GameStop is funneling a big chunk of cards over to PowerPacks. But I was looking at the numbers and I'm like, you add all the numbers together, and I thought, okay, if PowerPacks did 30 million in sales, then that means they would have done, if GameStop got a 6% commission on that, then they would have made about 2 million, right? And I ended up saying like, okay, they probably made 2 million in revenue and all 2 million of that is profit, right? They're just getting the transaction fee. We, in all likelihood, it's not that setup. It's not the, golly, this video is going to be so hard to follow. There's just so many, there's so many things about the Power Packs business that I almost want to re-record, but let me just try to slow down, say a few things. Hopefully you can track. I'm trying to do too many things at once here because I'm talking about my estimates. I'm talking about the actuals. The reason I teased my estimates up was because when it came down to it, the percent of sales devoted to collectibles based on these assumptions was only like 22%. And I just couldn't see that being the case. And so I just added some money to the top end, which skewed my estimate a little high when I could have been right on the money. Now, why? What we now know is actually my collectibles was right on the money. My hardware was way off. I'm excited to dive into hardware in videos soon and basically try to solve for the hardware revenue as it relates to Nintendo's earnings. And if I had leaned harder into Nintendo's reporting, because Nintendo reports their quarter four before GameStop reports its quarter four. GameStop reported its quarter three before GameStop reports its quarter three. because Nintendo's quarter ends a month sooner than GameStop's. So, anyways, if I had a more accurate hardware number, I would have ended up with a collectibles number right on the money. So all that to say, no, I am not incredibly discouraged about PowerPacks, and actually it's doing very similarly to what I thought it would be doing. Now, you read this, so let's talk a little bit about worst case, best case with PowerPacks based on the numbers that we know. The numbers that we actually know, right? So there's this little blurb included in the 10Q that wasn't there before, talking about, hey, Nat Turner is a an insider, right? It's a related party. And hey, GameStop started its collaboration for grading, etc. That started on October 15th of 2024. And so we have those numbers. Like, those numbers most definitely are included in GameStop's collectibles numbers. Their collectibles growing by tens of millions a quarter, and collectibles per store growing 150% year over year. That includes GameStop's graded cards business and card grading. There's no doubt about it. But then this new sentence comes in and says, during the second quarter of 2025, right? Because it actually technically launched on July 29th. So it technically did launch in the second quarter, but really it launched in the third quarter. This sentence was in the previous 10Q also because it launched, right? 2 days before the end of quarter two. So the only new information we have in this blurb is this last sentence: transactions with collectors and PSA were not material. So during quarter three, which for the full 3 months, PowerPacks existed in beta form, a limited beta with only Pokemon and football, the numbers from that were not material. Now, here's the most important thing we learned. I should have started with this at the very beginning because it is where I started my background. Cash flows from investing activities in quarter three included $17.5 million GameStop's investment into collaboration agreement. This was not there in Q2, right? August 2nd. Cash flows from investing activities did not include this collaboration. A couple huge implications of this. One is that the biggest one is this number, this cash flow is from investing activities. It's not from operating activities. The 17.5 million is a cash flow or a cash spend from investing activities, not from operating activities. You go back to this blurb we're talking about. Again, pull up the 10Q, look at it. The card grading and the graded card business, the PSA authenticated grading services. Look, this is an arrangement where the company, GameStop, becomes an authorized dealer, where PSA is providing services for cards through GameStop stores. The grading and GameStop's then ability to sell graded cards, to buy back graded cards, to purchase, right, trade in graded cards, to have graded cards available on GameStop's website. This is all within GameStop's operations. GameStop.com, right? Trading cards. You can get graded cards at GameStop.com. You can get your cards PSA graded through GameStop.com, through GameStop stores. If you're a GameStop Pro member, you can use your Pro discounts on GameStop's graded cards and even on card grading. This portion of the PSA partnership, the card grading and the graded card marketplace, is a partnership within GameStop's core operating business. You tracking? PowerPacks. You cannot use your GameStop Pro discount on PowerPacks. And the funds that GameStop allocated towards PowerPacks were an investment. This was not an operating expense. This was not a payment to PSA. This was not PSA's cut of the profits. This was an investment into a joint venture, into a different subsidiary, a different enterprise, a partnership that GameStop's investing in, owning equity in. GameStop owns some amount of equity of PowerPacks. What's that split? We don't know, right? What are the cuts of the revenue? We don't know. What's the cut of the profit? We don't know. Okay, but if you wanted to interpret this statement in the most bearish way possible, you could say, ha ha ha, look, PowerPacks, it's not doing anything. It's not making any money at all. See that? It's not material. All those videos you made about PowerPacks, they were stupid. You don't know anything, right? All that revenue that Courtyard was making, that now they're not, that happened simultaneously to PowerPacks being launched, doesn't matter, doesn't exist, right? All those cards that GameStop is dumping into its PowerPacks joint venture, its PowerPacks partnership, doesn't matter because it doesn't make any money. Okay, that would be like the most bearish way you could interpret it. And that's why I made the video that I made yesterday about GameStop's Q3, was it bullish or bearish? I didn't even talk about PowerPacks because what I want people to see is, okay, if you take that bearish of a stance of PowerPacks, you totally eliminate them from the picture. Guess what? GameStop's growth and fundamental outperformance and substantially growing trailing 12-month income is still very, very apparent, even if you assume that PowerPacks never achieves materiality, right? They are never a meaningful joint venture. GameStop's equity investment into the collaboration is dollars wasted, right? They're not going to make any return on that investment. PowerPacks is going to be a flop. You could think all of that is true, and it does not somehow like curtail GameStop's transformation. And I think that's one point I wanted to emphasize in this video. That's why I feel kind of scatterbrained in this video, is like some comments are I mean, you guys are really like respectful for sure. One person said something along the lines of like, the specific phrasing I wanted to highlight was, oh, here. PowerPack's not being material. It's a yellow flag, but when the future of the core business is hinged on it, it warrants a lot of attention. I made this whole video to try to illustrate that the future of GameStop's core business does not hinge on PowerPacks, like at all. And again, my initial projection for PowerPacks was 2 million that I then teased up to 3 million. So again, And I'm fundamentally very bullish on GameStop's core business and future outperformance. So I don't want anyone to think like, even if the sky is falling down with PowerPacks, the sky is not falling down with GameStop. Now let's talk about the most bullish case, right? What is the best case scenario for PowerPacks? Or in other words, what is the most PowerPacks could be making before GameStop would have to report it? Then it comes down to, well, what are the materiality standards for a partnership, right? An equity investment, a joint venture. This PowerPacks is not nestled within GameStop's operating activities. It's not GameStop's store. It's a separate business, a joint venture, a partnership that GameStop co-owns with PSA. That is so important because it meaningfully impacts materiality standards. If GameStop was selling these in their stores, in their name, and it's their product, then the materiality standards change dramatically as it relates to GameStop's liability and legal duty to report the numbers of the business. If it is a separate business, a joint venture that GameStop has equity in, the standards for materiality are meaningfully different. What are those standards for a partnership? Well, first, if the company has significant influence, 20 plus percent ownership, which we can assume GameStop does with digital power packs, it must apply the equity method. What is that method? The investor reports its share of the net income. The investment asset is listed on the balance sheet. So the balance sheet would show not the inventory that GameStop dumps into PowerPacks. GameStop does not have to list this as its own inventory. The PowerPacks inventory is not GameStop's inventory anymore. Rather, GameStop one day in their balance sheet will have a line item that's like PowerPacks, right? And shows GameStop's asset value, the book value, the asset value that GameStop ascribes to its portion of the PowerPack business, and summarize certain financial information if it's material. So when is it material? Basically, you have to give a summarized blurb if any of these thresholds cross 10%. 10% of assets, 10% of equity, 10% of revenues, or 10% of operating income. 10%. If any of those hit 10%, GameStop would have to at least put a footnote in their 10Q to highlight the performance of their joint venture slash partnership that is Digital Power Packs. So GameStop assets are 10.5 billion. So the maximum, like the asset value that Digital Power Packs has already amassed could be as high as 1.5 billion. Would I model it to be 1.5 billion in asset value right now? I wouldn't. But what I'm saying is it could be as high as 1.5 billion, and GameStop would not have to disclose that in their quarter three. So again, we're talking low end. PowerPacks is falling down, right? It doesn't exist. It's all vaporware. Now we're talking high end. How high could it be without GameStop reporting it? It could be 1.5 billion in assets. It could be 82 million in revenue. It could be 4.1 million in operating income. What is the equity value of digital power packs? How does GameStop report PowerPacks market cap, right? The value of PowerPacks, the business? Well, GameStop right now is a $9.8 billion business. So again, the equity of PowerPacks could be as high as $1 billion. The market cap, the value of PowerPacks. But here's the thing. If it's a joint venture and it's a 50-50 split, well, then PowerPacks could be 2 times all of those numbers. You tracking? If PowerPacks, again, at the beginning of this video, I'm talking about how's the partnership, right? And we don't know, of course, exactly what the partnership looks like. Is it PowerPacks business? GameStop receives a cut. Is it GameStop's business and PSA receives a cut? Or is it just totally a 50-50 split business? If it's a 50-50 split business, well, then they could have 2 point whatever that is. They could have 3 billion in assets as a digital PowerPacks business. They could have $3 billion in cards. And if GameStop owns half of it, well, then GameStop would only have 1.5 billion in assets, right? They could have done $140 million, or sorry, $160 million in revenue. And if only half of that is attributable to GameStop, right? GameStop owns 50% of the business. Well, then GameStop would not have had to report it. So the upside of PowerPacks is still much higher than what I originally modeled. It's very unlikely, based on these numbers, that PowerPacks is doing nothing. Very unlikely. So the question, anyways, let's kind of slow down. Materiality, if it's greater than 10% of any of those, GameStop would have to disclose something. If it's less than 10%, they don't have to. Now, if it's greater than 20%, then it would need to be reported, like audited entirely. Like, here's the PowerPacks 10Q, and here's GameStop's 10Q, and you can look at both of them, right? GameStop's 10Q includes the portion from PowerPacks, but then PowerPacks is also separately audited. Here's the thing. If it's an equity partnership, do you include revenue or profit? Never in its own revenue. GameStop's net sales do not include digital PowerPacks. Digital PowerPacks, as a separate business that GameStop is investing in and jointly owns with PSA, would you ever include your joint venture within your company's operating revenue? Never. You would not include PowerPacks revenue in your revenue. So again, going back to my original projection was wrong in that I was assuming basically that PowerPacks is one way or another lumped in under GameStop's operations. But what we learned in this 10Q is that it is an investment. It's a separate equity. PowerPacks is a separate equity. As a separate equity, you would not include it. You would not include its revenue in your own revenue. Its operations are not your operations. What you would include is the net earnings in your income. And chat summarize it says materiality affects disclosure, not consolidation. So going back to this whole 10% conversation, if digital power packs, if GameStop's portion of digital power packs had greater than 1.5 billion in assets, would GameStop then report that their assets are now 10.5 plus 1.5? What this is saying is no. You wouldn't make it your own assets. Like, you wouldn't call it your own inventory, right? You would just have a footnote. It's like, also, we've got 1.5 billion in assets over here, right? Or you would list it separately, right? Current assets and long-term assets. And then you'd have a separate line that's very clearly differentiated from your core operation, highlighting the asset value of digital power packs. Same with revenue. If this is an equity investment, you would never lump the revenue into your own operating revenue. What you would do is, if digital power packs is doing more than 82 million in sales in quarter 3, which means it'd be doing more than 164 million if they're splitting it 50-50, right? If digital power packs did 164 million in quarter 3, which is not what I'm saying happened, I'm saying that's the threshold, that if it did more than that, then would collectible sales have gone up by 82 million? No. If it had done more than 821 or 82.1 million, there would be a footnote or a very clearly differentiated portion of their income statement that says, also, we own this thing that did this much in revenue, and that money is coming to us. Okay. It's not a part of GameStop, but it is a part of PowerPacks, and we own PowerPacks, or 50% of it, and we are making money from that. Operating income, same thing. But this is where the numbers could be very clearly included, right? Is the net earnings. Saying, hey, we earned an extra 4.2 billion or 4.2 million as a result of our equity investment in digital power packs, right? Our equity investment, investing activities, not operating activities. It's a separate business that GameStop is invested in. So that's kind of the most bullish interpretation you could have for Q3, right? What's the ceiling for what beta power packs did? Well, the ceiling is that it did all those numbers I just mentioned. Over 8 million in profit, over 1.6, or sorry, yeah, over 160 million in sales, over 3 billion in assets and market cap, and then you split those by 2. But of course, the numbers could be higher if the partnership's not 50-50, right? If the partnership is 80-20 PSA GameStop, well, then all of a sudden GameStop's the portion of those numbers that affect GameStop could then be 2.5 times what I just reported, because then GameStop's only getting 1/5 of what digital power packs is doing. We don't know yet, right? I mean, it's one of the biggest bummers from Q3 is we don't know what they did. We don't know what digital power packs did. And we still might not know in Q4, because Q4, even though digital power packs will do more in Q4 than it did in Q3, more people have access. There's more types of products available. They've been, they added the lunar packs for Pokemon. Q4 will do more than it did in Q3. But Q4 is going to do more in hardware and software and in their graded cards, right? Their operating card business, their card marketplace and card grading will also do more in Q4 than it did in Q3. So will PowerPacks do enough more in Q4 to require disclosure from GameStop? No way. I mean, it very easily could not. Very easily could not. I think I'm going to save um my modeling, my expectations for what PowerPacks is doing right now for future videos. And we'll get there in like maybe a month, you know, maybe sooner. But I wanted to highlight what we know in a simple video. And hopefully this is helpful, right? We know that these numbers don't include digital PowerPacks. We know that digital PowerPacks is an equity investment and a joint venture. It is truly a partnership. We know that whatever the split of that partnership is, that it did not surpass 10% of GameStop's assets, equity, revenue, or income from operations, which I would not have expected it to. And we know that GameStop invested 17.5 million into it. Now, what is that investment? It could just be like money paid to build out the site and everything. Probably not, because you would have seen that in Q2 when it launched in Q2. Most likely, in my opinion, it's probably cards that they contributed, right? When they dump cards into the digital PowerPacks ecosystem, does GameStop receive basically like is that accounted as, hey, let's take the current market value of all those cards that you just donated to PowerPacks, right? You just took them off of your books, you took them out of your inventory, and you contributed them to the digital PowerPacks ecosystem. Does that like basically how do we compensate you for that contribution? Well, hey, let's consider that an equity investment, right? Or it could just be, hey, we got people to pay and or unrelated to the card dumps and just related to money funding card purchases, right? Hey, we want to boost more inventory. PSA, GameStop, it's time. Both of y'all send PowerPacks some millions of dollars. PowerPacks reps, go out there to card shows, go out there to eBay, start scooping up cards to buy inventory. Right. So there's not that much we know about what this 17.5 million was used for, but it was used as an investment into PowerPacks to scale PowerPacks. This was not like PSA's cut of the sales or PSA's cut of the earnings at all. All right. So what are the like my ballpark guesstimate back in this video? Again, a great video if you want to dive back into it. I will down the road, right? But basically, I looked at the courtyard drop off, and it seems to me like, and I mentioned this in that video, that courtyard lists their sales on both sides of it, right? So if someone buys a card from courtyard, that's a sale for $100. If they sell it back to courtyard, that's a sale for $100 or for $90, right? So these numbers per month potentially inflated by Courtyard's own sales on the Courtyard site. And then I was considering like how much of Courtyard's revenue is generated from all the different line items that PowerPacks does not currently have available, right? And ultimately I was like, ballpark, what if PowerPacks did 30 million in revenue? That was my ballpark in this video. What if PowerPacks did 30 million in revenue? In that video, I was thinking GameStop gets a 6% cut of that. GameStop made $2 million in revenue, $2 million in earnings, because it's cost free for them at that point. I don't think that's the structure anymore. I think if I were to take some of the assumptions from this video and start thinking about what are the upper and lower bands of what I think is reasonable for PowerPacks right now, say, okay, well, what if we took that same 30 million in revenue and say, okay, that's probably just split, right? It's probably a 50-50 partnership. And so GameStop has 15 million of revenue generated by PowerPacks. Would they have had to report that? No. Okay, I could have been wrong about these assumptions, but would they have had to report 15 million in the first quarter in beta? No, they wouldn't have. And then my ballpark margins have been 10%, assuming that PSA still needs a cut. If we're just talking it's totally a joint venture, it's like, okay, well, then there's probably a little bit more margin there. Maybe it's actually more like 12, 13%, maybe even 15% margins that ultimately that ultimately PowerPacks is getting. And if PowerPacks is this joint venture, and then, okay, so you split the money, right? 15% margins cumulatively for PowerPacks on 30 million in sales would have resulted in what? I'm like in some crazy thing. Okay, 30 times, geez, 0.15, 4.5 million for digital PowerPacks if there's a 15% margin, if they did 30 million in sales. But again, you cut that in half for GameStop's portion of it. You divide that by 2, that's 2.25. 2.25 divided by 41.3 is 5% of operating income. That is much less than 10%. So could my assumptions have been totally accurate with a renewed lens on the partnership, not as a business within their operations, but as a separate business, a separate joint venture that's actually just split 50-50 with costs, revenue, margins, etc.? Certainly. That, I mean, we won't know, right? For maybe another quarter, maybe another quarter. I think in Q1, I think Q1 earnings, which will be reported in June, I think it's I'd be surprised if we don't see some PowerPacks numbers by then, but not shocked. But I'd say it's more likely than not we learn something more about PowerPacks in Q1. Q4, it could still easily be hidden by all of the holiday sales. So they'll tell us more if they want to, but we know GameStop, they don't want to tell us anything until they have to. And Ryan Cohen's been really consistent about that throughout his whole tenure as the chairman and then as the CEO and then the CIO. He's very, very close to the vest. He doesn't want to give any information he doesn't have to give. As an investor, is that a little bit discouraging, frustrating at times? Sure. But is that big picture concerning on the long-term value being created? No. Um, GameStop has created a lot of fundamental value over the past 5 years. It just doesn't look like it because they were trading at a premium to their fundamental value for so much of the past 5 years, but they have finally hit the breaking point, the crossover point, right? Fundamentals have finally caught up to market value. And so every quarter from here on out, I do expect that to continue to increase. I'll get in that in a video soon. Someone asked me like, how does how do the numbers now um, impact kind of the long-term trajectory, all of that, valuations, all of that. Certainly excited to get into it, but that's kind of what we know right now about digital power packs, and what we don't know, what we don't know is anything. We don't know the revenue. We don't know the margins. We don't know how the partnership is structured. Those are the things that we don't know, and that's basically everything, right? But we have pretty clear guesses on revenue using the courtyard sales as a proxy. Decent guesses. We've got decent guesses um, on margins based on the instant buyback offers and the fees that happen within this system. We know that it's not a part of GameStop's core operation, but it is a separate equity. And we know that there's some type of split, right? GameStop, there's some type of partnership between the two. But regardless, the amount of income that GameStop generated from PowerPacks during Q3 was less than $4.1 million in income, which means that PowerPacks generated likely less than 8.2 million in income. And again, that's if my earlier assumptions were accurate, which they're probably not, but like if the ballpark revenue for the first quarter of digital power packs was something in the, let's just say 10 to 30 million dollars of revenue, or you could say 10 to 50 million, anywhere in that range, right? A super wide range. None of those would have had to been reported by GameStop in Q3. And whether it's 10 or whether it's 50, ultimately, how do you model it looking forward? We'll get into that in a coming video. And ultimately, are either one of those incredibly important for the long-term value of digital power packs? No. Like, no, it's not. It's not how you start, it's how you finish, right? Not to be too simplistic, but how much GameStop makes in the very first quarter in a beta product is not somehow this like glass ceiling proxy for this is the most that it can ever make. You know what I mean? It's just not. So, um, ultimately, what's really encouraging is GameStop's growth in the collectibles business and in their graded card business is very apparent, even without digital power packs being in the mix. How many more quarters until we see more about digital power packs? I don't know for sure. I think maybe 2, maybe longer, maybe longer. The problem is GameStop's growing, right? At least sales per store. But as they finally divest of France and then maybe Australia too, maybe that brings top line down low enough to where the revenue generated by digital power packs is meaningful enough to where it has to be reported. Certainly possible. But no matter what, again, it is not the crux of GameStop's value as a retailer. And we'll get into those valuations in coming videos as well. Okay, let me know what this answered, what questions this left, any other thoughts in the comments. I appreciate them all, except some of them that are very mean sometimes. But usually I still appreciate them in kind of a weird, twisted way. All right, that's all I got for y'all today. I'll see you in the next one.